How's everybody doing? This is Bob Iacchino along with Mike Arnold from Path Trading Partners. This is a weekend update, Path Chat for the week beginning May 21st, which is Sunday today. May 22nd will be Monday. In terms of what happened last week, I'm not going to go into too much of the data, although we are seeing continued stronger data out of the EU than out of the US. We are seeing some slightly improved US data, which would fit within the Fed's narrative of the first quarter being seasonally slow, as opposed to the overall economy slowing. We are seeing, based off of political turmoil here in the US, these sort of doing away with in a lot of markets of the Trump rally. When you look at a chart and you compare where things were on election day, or the day after the election, I should say, and the different asset classes that were rallying, they were diverse. That's not the case anymore. What we're seeing now is the dollar index is back to its levels before the election. Chinese stocks are back down to their levels before the election. The 2s, 10s yield spread, the spread between the 2-year note and the 10-year yield, back down to right about where it was on the election. The yield actually dipped just before the election and then rallied up. And all of those things were rallying up along with US and European stocks really until about maybe mid-April. And then those three asset classes I just mentioned, or rather asset indicators, dollar index, 2s, 10 spread, and Chinese stocks have fallen. Brazilian stocks are falling, but for different reasons, also associated with politics. The US just had a fairly decent earnings season. It's not completely over, but it's mostly over. As of Friday, 95% of the companies in the S&P 500 have reported actual results for the first quarter of 2017, and 75% of those companies have beat the mean EPS, and 64% have beat the mean sales estimate. Estimated earnings growth for the first quarter of 2017 was 9%. 68 of the S&P 500 companies have issued negative EPS guidance, and 33 have issued positive. And the forward 12-month PE ratio for the S&P 500 is now 17.3. This is above the 5-year average, which is 15.2, and the 10-year average, which is 14. Blended earnings growth for the first quarter of 2017 is now 13.9%. If 13.9% ends up being the actual growth rate for the quarter, it will mark the highest year-over-year earnings growth for the S&P 500 since the third quarter of 2011, which came in at 16.7. So earnings have been good, near great. So the S&P being higher is not a big shock. But when you look at the Trump rally, which was based on no hard data and simply on what everyone called animal spirits, and you look at those asset classes rallying, and you see that 3 of those asset classes, or indicators, in the case of the 2s, 10 spread, is back below where it was the day of the election, it can be somewhat concerning. So I'm not going to go over it. We need to see, with President Trump being overseas, if this kind of chatter that hurt the market slows. We'll see. It may not. So far, the Saudi Arabian trip, at least from an optics standpoint, has been successful. The U.S. and Saudi Arabia signed a $110 billion weapons deal, and the Saudis have committed to investing another $400 billion in the U.S. So President Trump can put those sort of in the victory column, considering all the turmoil and the microscope that he's under right now. In terms of the economic calendar for this week, tonight we got 2 fairly important numbers. We're looking for the UK's Rightmove House Prices Index year over year for May. Prices expected to be up 2%. Previous was up 2.2%. And we're looking for Japan's merchandise trade balance in yen, expected to come in at 420.7 billion yen, with 614.7 billion yen last. Monday, not a lot going on. At about 11:30 p.m., we're looking for Japan's All Industry Activity Index month over month for March, expected to come in at down 0.5 versus down 0.7. As always, the times I'm giving you are central. Tuesday, we've got a little bit busier of a day. At 1 a.m., we've got the Swiss trade balance for April. No estimate on that. Then also at 1 a.m., we've got Germany's gross domestic product year over year for the first quarter, expected to come in at 2.9% versus 2.9 last. This is a first quarter final, so they're not expecting any change from the last number. We're also looking at 2:30 a.m., Germany's manufacturing PMI and services PMI. Manufacturing for May expected to come in at 58 versus 58.2 last. And services for May expected to come in at 55.5 versus 54 last. Half an hour later, 3 a.m. Central Time, Eurozone market manufacturing PMI, services PMI, and composite PMI. The manufacturing is expected to be at 56.5. Services is expected to be at 56.4. Services is unchanged, and the manufacturing would be down a pip, so 56.5 versus 56.7 last. And the composite PMI, the important one, 56.7 versus 56.8 last. We're also at the same time looking for the German IFO business climate, expectations, and current assessment for May. Business climate, 113.1 estimate versus 112.9 last. Expectations, 105.4 estimate versus 105.2 last. And current assessment, 121 versus 121.1 last. These are all May figures. Jumping down to 8:45 a.m. Central Time, we've got the U.S. dollar, U.S. manufacturing PMI, and services PMI for May. Looking for 53.1 versus 52.8 in the manufacturing PMI, and 53.2 versus 53.1 in the services PMI. Also 9 a.m. Central Time, new home sales month over month for April. They're expected to be down 1.8. Moving on to 7 p.m. Central Time in Japan, Bank of Japan's Kuroda is speaking in Tokyo. That should be pretty important. Then at 7:30, we've got Australia's Westpac leading index month over month for April, and we've got the Japanese Nikkei PMI manufacturing, both at the same time, no estimate on either one of those. Moving on to Wednesday, May 24th, 1 a.m. in Germany, GfK Consumer Confidence Survey for June, expected at 10.2. It was at 10.2 last. Then you've got Draghi speaking in Madrid. Mario Draghi is speaking at 7:45 Central Time. That will be quite important. 8 a.m. U.S. House Price Index month over month for March, and U.S. House Price Purchase Index quarter over quarter. The month over month, we've got an estimate of up 0.6 versus 0.8 last. We've got nothing on the Price Purchase Index quarter over quarter. Then you've got the Canadian rate decision. Bank of Canada rate decision will happen at 9 a.m. Central Time, expecting no change on their rate. 50 basis points. It should stay at 50 basis points. Also at 9, we've got existing home sales for April in the U.S. And then, of course, as always, we've got the Department of Energy, the EIA crude inventories. That comes out at 9:30. Then we've got the release of the May FOMC meeting minutes. These are the minutes from the May 3rd meeting. That'll happen at 1 o'clock Central Time. Thursday, May 25th, 3:30 in the morning, UK's gross domestic product. Preliminary for the first quarter. It's quarter over quarter and year over year. The year over year number is the one that matters. We're looking for 2.1 versus 2.1 last. Quarter over quarter, we're looking for 0.3 versus 0.3 last. Getting to 7:30 a.m., U.S. dollar advanced goods trade balance, looking for a fall of $64.6 billion. We've got wholesale inventories, jobless claims, and continuing claims. All of that is at 7:30. Wholesale inventory is expected to be up 0.2 versus up 0.2 last. That's an April number. Initial jobless claims expected to come in at 238, and continuing claims expected to come in at 192.5. 232 last on jobless, 189.8 on continuing claims last. Moving on to 6:30 p.m., Japan's National Consumer Price Index, year over year for April. Expected to be up 0.4 versus 0.2 last. And then X energy as well is supposed to be unchanged, which was down last time. So we're expecting a tiny bit of inflation to peek its head up in the Japanese markets. And then to close out the week, Friday, May 26th, we've got U.S. gross domestic product. First quarter estimate expected to be 0.9 versus 0.7 last. Personal consumption in the U.S. expected to be up 0.4 versus 0.3. Then we've got the U.S. gross domestic product price index expected to be at 2.3 versus 2.3 last. Core personal consumption expenditures expected to be up 2% versus up 2% last. This is all at 7:30, by the way. And then durable goods orders and durable goods ex transportation also at 7:30. Durable goods orders expected to be down 1.5% on the headline, and ex transportation expected to be up 0.4. Then at 9 a.m., University of Michigan consumer confidence, the May final, expected to be 97.5 versus 97.7 last. And then at noon, the Baker Hughes rig counts, 18 weeks in a row now. Based on last Friday, we had an increase of 16 rigs last Friday that came out. So now 18 weeks in a row of rig increases. Crude oil up above $50 now, settling Friday right around the $51 mark. That's all I have for you in terms of fundamental news and in terms of the economic calendar. So let me turn it over to Mike to let you know what he's seeing on the charts. Mike, it's all yours.
Okay, thank you very much, Bob. Euro, US dollar. This is daily chart. You can see quick pause and then breakout to recent highs on Friday. If we continue Sunday night and Monday, next levels higher we'll be watching for 112.33, 112.47, then 113.14. Pullback levels 111.71. Then nothing really down to this 110.96 to 111 area. And if that's broken, 110.70 area. Let's just take a bigger picture look at this to put it in perspective. So on a continued rally, we also have this 112.33 area. And then if that's broken, this is a weekly chart. We're looking for this significant level up here to 113.14 level, and then eventually if we rally up to a major prior breakout zone, major prior resistance coming in about 114.56. That's just to keep things in perspective of where the euro US dollar has been. It's been this sideways channel, tried to break down below earlier or later last year, earlier this year, and then returned to the channel, and now we're rallying. We'll probably end up testing the other side of this channel, so don't be surprised at that. Let's switch over to the pound US dollar. Pound US dollar also rallied on Friday. Didn't quite get to the next key levels. Next minor resistance is going to be Thursday's highs coming in right around 130.47 area. Then above that, we're looking for a potential rally with some GAN projections to 130.67, then eventually 131.45. If it does pull back, very key support 129.89, followed by 129.41, and then if we break through all that, we're looking at about 129.22 area. Let's take also a look at this in the bigger perspective. So we're traveling up here. We don't even have a redraw on this trend line yet from a weekly time frame. We're into a clear path move. For this to play out, this is technically a trend line trade into a clear path move. Eventually, it should reach 132.90 as a full target. And we have the first cross rotation zone. So if we see pullbacks, these will be support areas on the way to the eventual target. US dollar, Japanese yen. Inside day on Friday, found some support at the 200. If it heads lower, Sunday night, Monday morning, watch for about 111 to 111.06 is first level support, 110.89 second level, then nothing really down to about this 110.47 to 50 area. And if that was broken, we could find support at was 110.24, significant level. Rally back up, last couple days a significant level in GAN level area, the 111.65 to 111.69 has been key resistance. So watch for resistance there again. If that's broken, 111.81, might see some minor resistance around the 50, which is 111.90, and then nothing until we get to the 112 level, where we're getting also a first cross rotation zone just above that. So switch over to the US dollar Swiss franc. It's continued its move lower on Friday, just closing below our significant level at 97.29. Continued move lower would take us down to about 97.12. Then we're looking for another significant level at 96.94. Then an eventual full target of 96.79. on a rally back up. We don't have any key fib levels we can draw yet. We'd be watching for some resistance right around 97.94, followed by 98.25, followed by right around 98.50, right in here where we have a declining 8 EMA. Aussie US dollar, outside day on Friday, highs exceeded Thursday's highs, lows exceeded Thursday's lows, closing up nicely on the day to a prior breakdown zone. Broke down out of these key levels and has returned to there. So rally back up. We're watching for about 74.67, first area of resistance. And then above that, 74.86. Then we have a significant level in flat 50 coming in right around the 74.93, which will be key. Then if that's broken, nothing really until we get to the 75.28 level. On a pullback, we're going to get some support right around the 74.34 level. Then we're looking down around the 74.20 level, followed by the 74.13, and finally the 74.06 to 74 even level. US dollar, Canadian dollar. Still continuing down. We had a trend line trade triggered into this clear path. Should eventually reach down to this 134.81 level. Found some support right around the 135.08 area. 50% GAN retracement. So further down move, we're watching for 134.84 to 81. Then below that, the next key level will be about 134.66, and then nothing down until about the 134.37. Rally back up. Resistance at the significant level coming in at 135.40. Then major resistance up here around this 135.75 to 135.87. Then nothing much until we get to the first cross rotation zone in this open right around 136.09. Finally, US dollar, Mexican peso. Been in this congestion for a while. Big spike move up on Thursday, gave us a new defining point for our upper trend line. Moved down on Friday, found some support near this prior low area. So on a continued down move, we will be watching for support coming in about the 1862.47, then the 1861.13. Then we have this key area down here, 1855.97 to 1854.27 area. Rally back up. Minor resistance right around 1876.98. Then we'd be looking for a possible return to about 1883.94. Then rallying to resistance around 1890.24. And on a really strong up move, right around 1896.65 to 1897.99 area. That's all we have for you. Back to you, Bob.
Thanks for that, Michael. There is a new Money Path podcast out. In case you guys haven't taken a listen to it, you can check it out on iTunes, Google Play, or go to our website, pathtradingpartners.com. Listen to the Money Path podcast. We're on our 72nd or 73rd episode. Pretty long run so far. If you like what we're doing, hit like and subscribe, and we will talk to you guys in the next Path Chat. Cheers, everyone.